The 4-hour 15-minute charts are all you need, and in this video I'm going to give you a simple trading strategy that's been used by thousands of traders. And if that wasn't good enough, I'm going to give you the completely full free PDF to this trading strategy in the pinned comment down below with the screenshots, with the step-by-step instructions that you need to start using this trading strategy today. Okay, so for this strategy, how it works is we use the 4-hour chart for our analysis and we use the 15-minute charts for our entries. Now, after 5 years of trading and teaching literally tens of thousands of traders, that combination right there is the easiest by far. So what you're going to do is you're going to get the 4-hour chart up, whatever market you trade, because this works on every single market that you can imagine, right? So don't ask me in the comments, hey Atif, does this work on my market? If you can find it on TradingView, if you can find your market on TradingView, this will work. So you're going to get the 4-hour chart up, and for this strategy in particular, it's very simple. All you need to do is mark out the most recent fair value gap in price action on the 4-hour chart. Now again, if you don't know what a fair value gap is, go look at this nice picture that I put on screen now. It's a very simple pattern in price action. Now, a fair value gap alone will not make you money, but the logic I'm going to teach you, well, again, there's only so much I can say on YouTube, right? You guys get the point, but all you're going to do is mark out the most recent fair value gap on the 4-hour chart. Now, all we care about now, right, is we just want to see price hit the 4-hour fair value gap on the lower time frames, which will be the 15-minute chart. And then we want to see what does price do, because there's really 3 things that price can do. So let's imagine this is the 15-minute chart. Price could either, and again, let's say this is the 15-minute chart now. So let's use your imagination. Let's imagine this is the 15-minute chart. Price could hit the fair value gap, quickly shoot off, give us a retracement, and then, obviously go up in the opposite direction. That right there would be great, because that would be confirmation that this fair value gap can hold. However, there are 2 other situations that can happen. Number 2, price could just smash right through the fair value gap, which again would not be good. And number 3, price could hit the fair value gap. We might set up you. And just do this. And you've probably seen this a lot, right? A lot more than you care to admit, where price just does nothing, right? So 3 situations that can happen, but all we care about on the 4-hour chart is just marking out the fair value gap and waiting for price to hit the fair value gap. Now, as soon as price hits the fair value gap, which is this little candlestick here, you don't have to wait for it to close. As soon as price touches it, you're going to quickly get onto 50-minute chart, and we're going to start looking for confirmation that we're on the right side of the market, right? Really important, really key word here, confirmation. So key thing for this trading strategy, because it's a day trading scalping strategy, is you only want to look for it at a key time of day. Now I'm going to put up the 3 major sessions on screen now. You've got Asia, London, and New York. And for this example, we're going to look at Asia session, because you will see, so this candle here, I think this candlestick all the way over here, this forms the 4-hour fair value gap. And you might be thinking, oh, Atif, we touched the fair value gap here. Yes, we do. But look at the bottom of the chart. Can you see this? See right at the bottom how it says 5 p.m.? Look at this right here. See how it says 5 p.m.? This is always in New York time, right? So New York Eastern time. Someone was asking me about daylight savings time. It doesn't matter what's going on with daylight savings time. Just use New York time, right? This is why I say use New York time. Just keep it on this. It doesn't matter about, daylight, shifting or whatever by an hour or 2. Just keep it on New York time and everything else will be fine, right? So whatever New York time is, you're going to trade based off that, right? So right here is 5 p.m. Eastern. This is not a key time of day, so we do not care. We're not looking for entries. It's not a key time of day. So, and this is a new day opening gap for those who know. So what we do care about is the next major session, which is Asia session, which is 8 p.m. Eastern all the way up until 12 a.m. Eastern. So right here, we really care about, okay, what is price actually going to do? So it's touched the fair value gap here, but it was a new day opening gap. It wasn't a key time of day. We're not interested. However, we are interested in this. Price hits the 4-hour fair value gap, starts to shoot off, gives us a retracement, and then consolidates for a bit. Consolidates for a bit, and then shoots off. Now I'll explain more why it consolidates. And the real reason why it consolidates for a bit is just because this is end of Asia and then beginning of London, right? And 2 a.m. is London session. Look at how perfect that is, right? 2 a.m. Eastern is right here. Look at the bottom of the chart. Instantly London session shoots off, right? Gives you a nice little move. And then starts to reverse. So really interesting. And again, with the 15-minute chart, you can just see the whole day's price action just using the 15-minute chart, which is why I think it's such an easy time frame to trade. However, how do we actually use this strategy, right? What do we actually care about? So again, we only want to look for our entries at key time of day. What I always say, and what's always not always the best, but what's always good and simple is this is the 4-hour fair value gap that price hits. It shoots off. All we want to do now is enter on a retracement and then write price off. Now, the way I always say, and the way you'll see in the PDF down below, is to wait for a fair value gap to form in price action. So let's imagine there was a fair value gap here, right? For example, you would enter on the fair value gap like this, and you'd put your stop either here at this low here, or wherever at this low. It doesn't really matter, but you'd put your stop at a reasonable place, right? So you will notice there is no fair value gap here in price action, which you will get. Sometimes there will be no fair value gap in price action, and there's really two things you can do. So there's the first option, which is you can get onto the 5-minute chart. I'm not going to do this, by the way. You can do this if you want to. You can go to the 5-minute or even the 1-minute chart and look for a new fair value gap to form. Or number two, and this is really important, I don't think I've ever mentioned this, not on YouTube anyway, is you don't have to use a fair value gap. You can use the order block instead, right? So for those who don't know what an order block is, maybe I'll put a nice picture on screen now. When you're bullish, it's the last down close candle before the up move, right? That is what an order block is. So this little candle here is your order block, right? You see this? Last down close candle before the up move. That's your order block. Price shoots off, gives you retracement, obviously consolidates for a bit because we're in between end of Asia and then beginning of London. As soon as London session starts, 2 a.m, instantly shoots off. Now, you don't have to use a fair value gap on the lower time frame, and order block is absolutely fine. Also, a little golden nugget I haven't told anyone is instead of the fair value gap, right? You know how I said in the 4-hour chart, wait for price to hit a fair value gap? You can do the exact same thing with order blocks, right? The exact same thing with order blocks. I just think fair value gaps are easy. But again, strategy it's really just looking for confirmation that the higher time frame is going to hold. But anyway, for this trading strategy, all we care about now is 4-hour fair value gap. Price hits the 4-hour fair value gap, and then we look for confirmation that we're on the right side of the market. So usually we want to see a fair value gap. However, if you don't see a fair value gap, you can take the order block too, right? Because what we really after is price shoots off, gives it a retracement, and then ride price off, right? Remember how I said right at the beginning, there's 3 things that price can do? This is the only scenario that we care about. We want to see confirmation that the 4-hour fair value gap that we marked out at the beginning is actually going to hold. So what we're going to do, clear this off. This order block now is going to be your entry. So you can enter on the order block. For your stop loss, let's just make this a bit clearer. For your stop, you can put it at the low if you really want to, or you can put it here, right? Really does not matter, but let's just put it here for simplicity's sake. So what are you going to do? But take profit. And again, remember, this is so important. So you'd enter the trade around 11 p.m. Eastern, 11:15 p.m. Eastern. It will consolidate for a bit just because it's end of Asia, beginning of London. That dead time, those like 2 hours in between end of Asia, beginning of London, will always chop, right? This is why I always say, make sure you enter the trade during a major session. Do not trade outside of sessions. If you do, you will have more trades, but a lower win rate. So it's a big trade-off. But if you're just starting out, honestly, just trade during the major session. So you have a little bit of consolidation. And again, really easy on the 15-minute chart. Set your limit orders up. Have your stop here. Have your entry here. Have your take profit at 3 to 1. And literally, I was going to say get your money and get out, but you guys get the point. YouTube's new policy and stuff. But this is all you really need for this trading strategy. 3 to 1, consistent setups, day in, day out. You will find a setup every day in one of the major pairs, right? This is why if you follow me on X, which you should be doing, you'll find I'm not a big believer in just trading one pair. I think you should have as many pairs as you can handle, not as I can handle, not as ICT can handle. Have as many pairs that you the trader can honestly handle, right? So again, I like to trade all the majors. Just literally go onto the 4-hour chart, go into the 15-minute chart, and look at this setup, and you'll find the setup in at least one of these pairs every single day, and then you just trade at the setup. That's all you need for this trading strategy. If you want to see more examples, make sure you check out this playlist on screen now.